Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 28th, 2025, and we're diving into Phreesia's latest earnings report for the first quarter of fiscal year 2026. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Phreesia's performance, especially given their strong start to fiscal 2026.
Absolutely. Phreesia has been making waves in the healthcare technology sector, and their latest report seems to reflect that momentum. Let's get into the details. Revenue and profitability overview. Let's start with the top line. Phreesia reported a total revenue of $115.9 million for the quarter, marking a 15% increase year over year. John, what are your thoughts on this growth?
It's quite impressive. The revenue growth is driven by an increase in both the number of healthcare services clients and the revenue per client. This indicates that Phreesia is not only expanding its client base, but also enhancing the value it provides to each client.
Despite the revenue growth, the company reported a net loss of $3.9 million. How does this compare to their previous performance?
That's a significant improvement from the $19.7 million net loss in the same period last year. This reduction in net loss, coupled with an adjusted EBITDA of $20.8 million compared to $4.1 million last year, shows that Phreesia is effectively managing its costs and improving operational efficiencies.
Operational efficiencies and future outlook. Phreesia's operational efficiencies seem to be paying off. They reported net cash from operating activities of $14.9 million and a free cash flow of $7.5 million. What does this tell us about their financial health?
These figures indicate strong cash management and operational efficiency. The positive cash flow and substantial cash reserves of $90.9 million provide Phreesia with the flexibility to invest in growth opportunities and weather any potential market fluctuations.
Looking ahead, Phreesia has maintained its revenue outlook for fiscal 2026 at $472 million to $482 million. How does this align with their current performance?
The maintained revenue outlook suggests confidence in their growth strategy and market position. With their current trajectory and focus on efficiency, Phreesia is well-positioned to meet these targets.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 13 cents for Phreesia, but the company reported an actual EPS of 7. How significant is this beat?
This is a notable beat. Reporting a smaller loss than expected is a positive indicator of Phreesia's financial management and operational improvements. It reflects well on their ability to exceed market expectations and could bolster investor confidence.
With this performance, how do you think analysts will adjust their expectations moving forward?
Given the positive surprise in EPS, analysts might revise their forecasts upwards for the coming quarters, especially if Phreesia continues to demonstrate strong revenue growth and cost management.
CEO insights and strategic initiatives. CEO Chaim Indig mentioned that fiscal year 2026 is off to a strong start. What strategic initiatives are driving this momentum?
Phreesia is focusing on operational efficiency and expanding its client base. With 4,411 average healthcare services clients and a revenue per client of $26,283, they're clearly enhancing their market presence and value proposition.
How do these initiatives align with their long-term goals?
These initiatives are crucial for sustainable growth. By improving efficiency and increasing client engagement, Phreesia is setting a solid foundation for long-term success and market leadership.
Key takeaways. In summary, Phreesia has delivered a strong start to fiscal 2026 with impressive revenue growth and a notable EPS beat. Their focus on operational efficiency and strategic growth initiatives positions them well for the future. John, any final thoughts?
Phreesia's performance is commendable, and their strategic direction is promising. Investors should keep an eye on their continued execution and market expansion.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Phreesia's performance in the comments below. Until next time.